Welcome back to Switzer on Australia's Business Channel. My next guest comes from the aptly named Under the Radar business. And to test him out, I've asked him to give us 5 stocks that are worth investing in and which are under the radar. His name is Richard Hemming and he joins me in the studio. Richard, thanks for coming on the show.
It's great to be here, Peter. Fantastic to finally get on the Switzer Report. Such an honour.
Terrific. You're making me feel humble now. So the pressure's all on you. I think you've got an interesting name business under the radar. A lot of people like to see stocks that are in that sort of situation. I've put the acid test on you first up. Give us 5. We'll just kick off with the first one. We'll have a chat about it.
Well, the first couple, I think, are kind of at the speculative end of the stream. So, when you're looking at small caps, which we do, there are small caps of fund managers, and generally they're not as small as the companies that we look at, because we tend to look at companies with market caps of under 300 million, and all these companies fit that criteria.
Right.
The first one I'm going to talk about is ImpediMed, which is a company actually that was first introduced to me by Simon Moraes. Who owns an impressive suite of biotechs, some of which have unfortunately crashed and burned lately. But what's good about
this happens at this end of the market.
It does, and I think it's a very topical end of the market, Peter, because I covered biotech for a number of years for the FT, so I've seen my fair share of successes and probably more than that disasters.
Did you see Xero coming?
Yeah, well, which one, sorry?
Xero, the software company.
Yeah, I mean, that's more a technology company.
Yeah.
In the biotech land, I think we're looking at like QRX, which fell about 80% recently, and Prana Biotech, which also fell about 90%. So there's been some real disasters.
And it's a really important thing when you are talking to non-experts that this is what can happen with these companies. They can be...
Well, exactly. But what I'm going to say to you is that there are ways to minimise your damage or to look out for, I guess, companies that aren't quite so that don't have quite that potential for disaster. And one of those things is not only a high cash balance, which this company has, but also approval, and so they're getting dollars in the door now. And approval's the big sort of blocker for a lot of these companies. That's what happened to QRX. They didn't get
as we see on the screen right now.
Yeah, I mean, QRX was an absolute disaster, and it was amazing the disparity between the things that they said versus the things that the FDA said. Yeah. So this company produces a treatment, or not.
This is ImpediMed we're talking about.
ImpediMed's not a drug; it's a diagnostic tool, which is a lot less risk, and it diagnoses people who've been through chemotherapy and have the potential. 30% of people who've been through chemotherapy get lymphedema. Now that's swelling of your extremities, and by the time you see it, it's too late and you're in danger of losing a limb. I don't want to sound flippant, but I'm not going to get medical on you because I don't quite know the details. What I do know is that it's a massive market, and that having this, not only the approval from the FDA, but reimbursement, which is later in the year, is a big factor.
So to explain it, so approval from FDA, and when you say reimbursement, who reimburses?
Well, the government reimburses the patients or for the product. The level of reimbursement is questionable.
It's like subsidisation.
Well, people over 65 at this point will get reimbursed for this. So it's not just subsidising; it's actually paying them back. And the good thing about this product is that it's a consumable. So you need it 4 or 5 times in the first year after you've had chemo. So there's a compounding effect for the shareholders. So in the first couple of years, if they get a market share of 30% of cancer patients, they're liable to make $400 million from the consumable component of this.
Okay, so that's ImpediMed. Let's flip over to the next one.
Well, the next one's Yowie, which is a chocolate manufacturer, which is pretty speculative. But what they have is they have the patent to produce encapsulated chocolates in the US market.
Okay, encapsulated.
Like a Kinder Surprise.
Okay, yeah.
So I must admit, when I first heard about this story, I thought, wait, I have to look at the backstory here, because it's pretty weird that one company can have this patent.
Effectively, it's a patent.
And so that it is a patent, and it's only for the US market. So Kinder Surprise can't attack that market. And to give you an idea, like Kinder Surprise basically sells about 1.2 billion Kinder Surprises in Europe. So people have extrapolated that.
Now, is this a Nestle product or something?
Well, it was distributed by Cadbury's in the 90s,
yeah.
but then. You know, in Australia, and they shipped 60,000 units, so it's like $50 million worth. So, but then what happened was Cadbury didn't own the IP to the product, and the owners of the IP to the product wouldn't sell it to them. And then Cadbury got bought out by Kraft, as you know, in 2009. And Kraft don't do children's confectionery. For what reason? There's a lot behind this that escapes the
good stories.
mind. Yeah, it's a good story.
Yeah.
And anyway, so now this guy who's a mining engineer, it came across his desk. So he has kind of recapitalised the company.
What's his name?
His name's Wayne Loxton.
Okay. Yeah.
And his background is mining engineering, doing deals in the mining sector, and somehow he came across this deal, and he recapitalised the company, put it into a shell, and then they've raised recently they've raised 8 or 9 million, and then another 3 million.
So a shell to make shells.
Yeah.
Wow.
Yeah, that's good. That's good. I mean, that's why
I do the show, mate.
That's right.
It's fast thinking. Okay, so Yowie, a very interesting company. Let's go to your next one.
The next one's Titan Energy Services, which is one that has had explosive growth off the back of coal seam gas.
Right.
I mean, really explosive.
How many years has it been going for?
2007.
Yeah.
These two mining engineers, I've got the mining engineers on the mine, but two drill operators got together, and then they formed this company, and then basically I think it took off after they made an acquisition, and now they've just got this. They've got these drill rigs that are producing, great earnings growth, but of course that's fairly capital intensive. What they've done is diversified out their earnings stream into provision of the centres, of the villages where people live, and all the services that are required. So they've broadened out their offering. So they've basically got a business that's got a much higher return on equity than just drilling.
Okay, next one. That's three. That's three good ones.
Capilano is another interesting one.
Oh, the honey company.
The honey company.
Yeah, up in Queensland, isn't it?
Yeah, they're mainly in Queensland. Yeah, but they are also in Australia.
I think the head office is in Queensland.
Yeah, the head office is in Queensland.
I've done a story on those guys.
And this is a great sort of story about all the beekeepers banding together.
Okay.
Well, this used to be a co-op. This used to be a co-op started in 1953 by two brothers.
Yeah, okay.
And anyway, the guy who runs it, Bob McKee, Ben McKee, he's a fifth-generation beekeeper. So there's beekeeper, to the bones. And basically, this company, what under the radar has made a lot of money for subscribers is in the food industry. I mean, there is a hunger out there for natural products. I mean, we were one of the first on the Warrnambool Select
Bega
Harvest.
as well?
Sorry?
You go for Bega as well?
No, Bega was always a bit too big. Like, we try to keep to our small cap. Otherwise, the Freedom Foods, Select Harvest, Tassel are the salmon producers. So you name it, and we've been there.
Okay.
Well, except for Bega, obviously, but that was big. Okay. But this company is about to service the hunger for that product for honey in China. So what they've done is they've focused on not wholesaling product or selling it in bulk, but on retailing it where the margins are much bigger and buying some specialty brands where it's like 5 times the return or 5 times the price. So they've got quite a high value added product. Yep. What stopped them is supply of honey. The supply of honey for weather-related reasons was really down this year, and only 7,000 tonnes were produced, whereas the Australian market alone requires 12,000 tonnes. So basically, according to Ben, the gods are smiling on the bees or whatever. Yeah. And this company, which has a 40,000 tonne capacity, is preparing itself to service the real demand that is there in the Chinese among the Chinese.
Their challenge obviously would be funding the kind of growth to service.
Well, they have. Well, I don't agree, because they do have a good balance. They've reduced their debt to negligible levels, so they do have debt. But I don't think that's the challenge, because they have been getting good cash flow. Yeah. And they also have as I said, their fixed costs are taken care of with the 40,000 capacity.
Okay,
So that means that the fixed costs are there. All they need to do is for it to drop down to the bottom line via export sales to China.
Okay, final one.
360 Capital is a property company. I think it was brought to me by LHC Capital, who is a hedge fund, and those guys are always on the lookout for what all small cap fund managers and investors look for, which is operating leverage. Now, 360 Capital has that because they're basically a property fund, a property developer. They bought Beckton Property. This guy, what's the guy's name? Tony Pitt. I wasn't going to say Brad Pitt, let me tell you. He wouldn't be in properties. But,
well, he probably is, but not this property.
Well, maybe, not this property. Yeah. But anyway, he's turned it from being a developer, which is highly capital intensive, to being a property manager, a fund manager. Okay. So basically, these guys get a clip on all these 6 or 7 or 8 property funds that they have. So this is like the vehicle. It's like Macquarie Bank, when Macquarie Bank used to have all those fund management vehicles and used to reap the rewards from them. The same corner. It was like, you can get massive return on equity from this, which is what you really want in the small cap, because it's all about operating leverage.
Okay, mate. Well, fantastic. There are 5 really good ones.
Well, I guess we'll find out.
Well, that's right. But we're backing your very learned judgment on this one, though, Richard. If people want to know more about you, you're undertheradar.com.au?
Yeah, undertheradar.com. and we do a 30-day free trial, so that'll give you more than enough time to check out our performance and run us through the ringer.
Okay, great stuff, mate. Thanks for joining us.
Thanks for having me.
I hope you're right too. After the break, how do you polish your sales technique to keep the punters purchasing and your profits healthy? Sales expert John Lees joins me next.